To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
So friends, let us now look at the second type of cost variance, that is the labor cost variance. Let's start with an example. Say we want to develop a mobile game which is based on the Super Mario theme. It's a lot more advanced and a completely new game that we are proposing. For this purpose, let's say we go to a developer and we ask him what is the time and what is the cost that it is going to take in order to develop this game. The developer takes all the description and all the features that are required in the game, and then he thinks for a moment and says, we are going to take an estimate of 1000 hours and I am going to charge you 100 rupees per hour towards the cost of the development. So friends, what is the estimated cost of this game? The estimated cost is going to be 1000 hours into 100, that is 1 lakh. So we agree with the mobile developer and we tell him, okay, please go ahead and make a fantastic game which is going to change the entire gaming industry. After 1 month, we again approach the mobile developer and we ask him, look boss, what is the status about the game? He says, sir, the game is done and here is your bill. Now when we look at the bill is for 99,000. We get surprised. We ask him, look, the estimate was 1 lakh, but you have given a bill of only 99,000. What is the reason for that variance? Then the mobile developer starts explaining. He says, we estimated that there are going to be 1000 hours, but we have actually taken 1100 hours, but the cost per hour I had told you 100, we were able to do it only at 90. So 1100 hours into 90, here is your bill for 99,000. Now friends, let's look into what exactly happened here. See, two things went wrong. One, we estimated that we are going to take 1000 hours, but we have actually taken 1100 hours. That means on account of the time that we have taken, there is a difference of 100 hours. We have taken 100 hours more than what was estimated. This is one. And second, we estimated that we are going to incur a cost at 100, but we have incurred a cost only at 90. That means we have spent 10 rupees less than the estimate what we had. Now these are the two variances that we are going to learn in labor cost variances. The first is going to be called as the labor rate variance, where we are going to compare the two rates, the 100 rupee rate per hour versus the 90 rupee rate, and second, the labor efficiency. We should have taken 1000 hours, but we have taken 1100 hours. So we are going to call this as the labor efficiency variance. So friends, the labor cost variance is going to be the difference between what we had estimated and what is the actual cost that we have incurred. Simply said, it is the standard cost of labor versus your actual cost of labor. Now, this labor cost variance can be divided into labor rate variance and labor efficiency variance. Let's look at the first type of variance. Now, the first variance is the labor rate variance. In labor rate variance, what we are essentially going to do is we are going to compare the standard rate at which we were supposed to make payments to the workers with the actual rate at which we have made the payment. Now, in our example, we were to make payment at 100, but we have made payment only at 90. So to the extent of 10 rupees, there is going to be a short payment. Now because we have incurred lesser cost, is it going to increase our profit or is it going to reduce your profit? Obviously, since we have paid less, it is going to increase our profit. So this we are going to call it as favorable variance. Now please think for a moment and tell me, on how many hours did we pay this 10 rupees less? We have made a payment for 1100 hours. So totally for 1100 hours, 10 rupees we have paid less. So there is going to be a difference of 1100 into 10, 11,000, and this 11,000 is going to be favorable. So friends, the labor rate variance is going to be the standard rate minus your actual rate into the actual hours that we have paid for. Next, now let us look at the labor efficiency variance. See, when we first approached the developer, he said he is going to take 1000 hours to complete. But he has taken 1100 hours in order to complete the project. Now, did he take more hours than what he had promised, or has he taken less number of hours than what he has promised? Obviously, he has taken more hours to do the same amount of work. So here he is considered to be lazy. He is considered to be inefficient. Because of his laziness, because of his inefficiency, we have to pay more money to him. Now for these 100 hours of his inefficiency, for each hour we have to pay the rate of 100 rupees which we had agreed upon. So 100 into 100, 10,000 is the extra payment that we have to do on account of his inefficiency. This we are going to call it as labor efficiency variance. Now let us look at the labor efficiency variance with a little bit more of detailing. Just imagine that you are preparing for your CA Inter examinations, and as a part of your study plan, you promise your mother saying that I will do a night out, and during the entire night I will study for 10 hours, and in 10 hours my target is to complete standard costing. So you have promised your mother that you are going to study for 10 hours in the night and you are going to complete the standard costing syllabus. Now you start off with full energy, excitement and zeal to complete the topic. You start studying, and as you study for 1 hour, suddenly what happens is the electricity goes away. Now, because the electricity is not there, there is no power and there is no light. Because of there being no current, you are not able to do the studies. Let's say the power does not come back for 4 hours. And once the power is back, then you restart your studying. So 1 hour you have studied, then 4 hours there was no power, and then again you have restarted studying and you have studied for the balance 5 hours. So your plan was to study for 10 hours, but out of this 4 hours you are not able to study. Imagine next day morning your mom comes up and she checks with you. She is asking you whether you have completed your standard costing, and you tell her, no, I have not completed. Then she starts scolding you saying, you are so inefficient, I am sure you must have played games and not studied. Will she be correct in saying that? The answer is no, we wanted to study but we could not study because there was no power. So here what has happened, friends, that out of the 10 hours, due to some reason which is beyond our control, we were not able to carry out the studies. This is called as the idle time. Now whenever we are computing the labor efficiency variance, we need to be careful about the time that got wasted or the time for which we were not able to work. This time, this idle time has to be accounted for separately and should be segregated from the labor efficiency variance. So what we are going to do is, whenever we have labor variance and whenever there is efficiency, inefficiency in the carrying out of the work, first we will identify whether there was some wastage of time, whether there was some idle time. If there was some idle time, we will remove the idle time and only then calculate what is the labor efficiency variance. Now what is idle time, friends? Idle time is the difference between the actual hours for which we have paid to the workers and the actual hours for which the workers have carried out the work. So the difference between the hours paid and the hours worked is going to be called as the idle time. Let's take a small numerical example and understand how we are going to calculate the labor idle time variance. Say the standard hours required to carry out a particular job is 100 and we have actually paid the workers for 125 hours. Now friends, if we are not aware of the concept of idle time, we would have said the labor has taken 25 hours more than what is the standard, and we would have blamed their inefficiency for these 25 hours. But if I now tell you that look, out of the 25 hours, 10 hours there was a breakdown of machinery and 2 hours the labor had to wait because the raw material had not arrived. So totally they were not working for 10 hours on account of breakdown of machinery and 2 hours on account of raw material not being available. So out of 25, 12 we have called it as idle. The balance 13 is the actual inefficiency of the workers. So the labor efficiency variance is going to be 13 hours adverse into 10 rupees per hour, 130 adverse. Totally put together, idle time 120 adverse, efficiency variance 130 adverse, 250 adverse. Let's now summarize the entire labor cost variances. The labor cost variance is the difference between the standard cost of labor and the actual cost of labor incurred. This labor cost variance can be bifurcated into the labor rate variance and the labor efficiency variance. But before we calculate the labor efficiency variance, we have to ensure that the idle time has been segregated and accounted for separately. So at a broad level, we will say labor cost variance is divided into rate variance, idle time variance and the efficiency variance. Now friends, what is rate variance? It is the difference between the standard rate and the actual rate, and the rate is the responsibility of the HR department. The one who is recruiting the workers has to ensure that it is as per the standard rate. Alright, so the computation of labor rate variance is going to be standard rate minus actual rate into the actual hours paid for, irrespective of whether there is idle time or no idle time, whether the labor was working or it was not working. Totally we have made payment to the workers, that we have to consider. Then coming to the second one, idle time variance. Idle time is the difference between actual hours paid for and actual hours worked for. The balance we will multiply it with the standard rate in order to compute the idle time variance. Third, we have the labor efficiency variance. This computes the difference between the hours that we should take and the hours that we have actually taken. The number of hours taken is the responsibility of the labor supervisor or the production manager who is in charge of the workers. If they take more number of hours, it is going to be called as inefficiency. If we take less number of hours, the labor is going to be called as efficient. The way we are going to compute is standard hours minus the actual hours worked into the standard rate. Friends, why are we taking the standard rate? Because rate is the responsibility of the HR department and not of the production manager. He is not the person who is going and recruiting the workers. So we keep it very simple, we take the standard rate. The labor efficiency variance then further can be bifurcated into labor mix variance and labor yield variance. Now I also want to introduce two terms to you which we use specifically in relation to labor. The labor mix variance in technical terms is called as labor gang variance. The composition of the gang. It is exactly same as your mix variance. The labor yield variance in technical terms we call it as labor sub-efficiency variance. So we will have two, labor efficiency, labor sub-efficiency. Now for the purpose of mix variance, we are going to compare the revised standard hours and the actual hours. Whatever is the difference, it is the variance on account of the mix. When we come to yield variance, or as we say the sub-efficiency variance, we are going to compare the two standards, the original standard and the revised standard. This will be called as the labor sub-efficiency variance.